Look, I get it. Some people are just real estate people and some people are stock market people. But what if you don't know which one you are yet? Today I'm going to break it all down so you understand both sides of the argument, and then hopefully you'll be able to see which one is best for you. And if you're new to my channel, well, welcome. My videos are about investments that anyone in the world can make. And let's just get straight into working out which one is better, whether it's the stock market or real estate. So in this video, I'm just going to be talking about the performance of the index funds. So that's the S&P 500. Now, there are lots of different ways to invest in the stock market. You can follow things like the acquirer's multiple, the magic formula. You can be a passive value investor like me. But just for simplicity, just for today's video, we're going to talk about just the index funds and comparing that with real estate. And on a personal note, well, I actually do have investments in both index funds and in real estate. Historically, after adjusting for inflation, a long-term investment in the index funds would return you around about 7% per annum. Now, of course, there are higher and lower ranges for investing in the stock market. So, for example, I don't know, the Peter Lynch Magellan Fund from 1980 to the mid-1990s, well, it returned nearly 30% per annum. And there are a lot of investors and a lot of funds out there that return you far less than this, some of them even less than 0%. So the safe approach is to just get a broad basket of all the companies in the S&P 500 and invest in them for the long term, which would give you that 7% after inflation. Now, stocks are super easy to manage. Once you've set up a trading account, well, to invest in the S&P 500 index fund takes about 1 second. Now, occasionally you're going to put more money into the trading account and you are going to get dividends that you're going to need to reinvest, but for like 10 years, you pretty much have to do nothing. This is great for people who are really busy or they just don't feel confident investing in a single piece of real estate or in a single individual company. So someone like my mother, this is perfect for. Actually, I think this is perfect for about 99% of the people in the world. Another big positive to investing in the stock market is that you can start with just a really small amount of money, say a few $100s, and just add to it over your lifetime. So it's a lot better for those people out there who cannot afford the big investment like a real estate purchase. So the index funds that you've invested in, well, it's actually really easy to turn that back into cash. So it's nice to know that if you get into some trouble over some time in this long-term investment period, well, you can just turn it into cash and use it. Maybe it's for a hospital bill, maybe it's for, I don't know, maybe it's a lawsuit or something like that. Now, obviously, that's a lot different to a piece of real estate where you have all your money tied up and it's going to take a long time to get that money out and back into your bank account. Okay, now let's talk about some of the negatives of investing in the stock market. And unfortunately, in the stock market, well, a lot of people get very emotional. The prices, well, they can jump around wildly. See, one day you'll check your account and it's got $100,000 in it. And then 2 weeks later, well, it might be only $70,000. Now that plays on your mind because you feel like you've lost a lot of money. But the best thing to do, especially with index funds, is to invest in these and then just try to forget about them. Because if you pay attention to the market every day and watch these big jumps, well, it's going to totally stress you out. Now, I know everyone is going to quickly tell me that you can borrow money to invest in the stock market, but let me say this as clearly as possible. Never, ever, ever, ever borrow money to invest in the stock market. So let me explain. So when you're borrowing money to invest in the stock market, often it's going to be called margin lending. See, what happens in a market crash, which does happen quite often, is that the lender will take everything well before the market has had a chance to turn around. Unfortunately, you'll sell out right at the bottom and probably be completely wiped out, and you've had no chance to recover. Just please, never do this. Now, this is what I think the biggest plus is to real estate investing. See, banks, they're a lot more likely to lend out money to somebody to put into a mortgage than they are for anything else. They feel a lot safer with real estate. So if done correctly, well, you get to take advantage of this larger amount of money for investing. And this is where you can do better than the 7% adjusted for inflation. If you do this really well and you know your numbers really well, well, you can actually beat, say, 20%. Now, that's a far bigger upside potential than the 7% you're going to get out of the S&P 500 historically. And it's actually because you're borrowing money and you're actually running this real estate investment like a small business. So you can manage this however you want to. It's yours. You can design it however you want. If you think you can renovate and increase the value, well, you can just go ahead and do it, unlike the stock market where you have no chance to improve the value of the company yourself. There are tax advantages in a lot of countries that will help you reduce your income tax each year. Now, each country is obviously very different here, so I'm not going to go into detail about the tax, but for those who can take advantage, there are some really good tax breaks you can take. Now, the stock market moves around very quickly, and in the stock market, you can actually check the value of your investment every day. You just get onto your computer, log into your trading platform and see what the changes have been. Maybe it's up $1,000, maybe it's down $10,000, but you're not logging onto your computer and seeing what your house value has changed every day. And real estate on average doesn't have anywhere near the big ups and downs that are found in the stock market. Now, unlike the stock market, saving up for a deposit on a house or even just buying the house outright is going to take a lot of time, and obviously that's going to be a lot more money. It often takes people several years to build up enough money, so while they're waiting, that money's just sitting in cash doing nothing. Okay, now you've spent the last few years saving up this money, and now when you finally spend it into the real estate investment, well, you probably don't have any other investments. Now, the difference between the investment in the house and the investment in the S&P 500 index fund is the S&P 500 is 500 companies that are all in different industries and they all have a global presence. And that is far more diversification than your one house on one street in one town in one country. And because of this, you're actually at higher risk to be influenced by things that happen in your town or in your country. For example, I remember seeing housing prices in little mining towns in Australia for more than 60% because some of the big mines, well, they stopped operating and they left town. Now, it is possible for it to go the other way as well. For example, if you invested in Sydney or Vancouver, say 20 years ago, well, you would see a far higher return than the world average. Now, to have reasonable diversification in real estate, well, you'd actually have to invest in lots of different size housing investments all across the world. My estimation would be around about 25 or 30 different properties in 6 continents. Can you imagine looking after 25 different properties in 6 different continents? Well, that's going to be a management nightmare. Now, investing in real estate, you're really going to have to want to get involved in the process. You have to learn a lot and it's going to take a lot of your time. Here are just some of the things you need to work out. You need to find a good deal, finance and close the deal, renovate, find tenants, replace tenants, get phone calls to fix things at the middle of the night. You have to do property taxes. You have to look after insurance. So if you value your time at $0 per hour, then it is possible to compare with the index fund, which requires no time at all. But I hope your time is worth more than $0 per hour. Now, on average, it takes about 45 days to sell a piece of real estate, and there's fees and costs involved in that as well. So if you are desperate for the cash, well, unfortunately, this is just not going to be a good option for you. So in an emergency situation and you're desperate for that cash, well, it's just not going to be possible. I'm really actually sick of hearing people taking out big mortgages. Then they're just super stressed because their reliable income job is now looking less reliable. They can't take that 3-month holiday to explore Africa like they dreamed of doing because if they don't just keep working, well, they can't make the payments. They are locked into their job for the next 20 years. Also, their partner, who was helping with the payments with her job, well, now needs to take some time off work because she's having a baby. Now your costs at home are going up as well. Then there's rumors about redundancies at work and your stress levels just go through the roof. Real estate investing, it can spiral out of control if done incorrectly. So you just got to be conservative and you've got to really understand your numbers. And if you're not willing to take this on as a part-time job, well, I just don't think this is for you. Now, if you want to learn how to do real estate investing properly, well, I suggest going and watching and reading everything from the guys over at Bigger Pockets. That is a really good resource, but unfortunately, it's mostly for Americans, but I think you can probably apply some of those principles in your own country anyway. So here are the pros for stock market investing and real estate investing. In the stock market, well, you're going to get about a 7% average return. It's very easy to manage. There's a low starting amount needed, and it's very fast to sell. For real estate, well, the advantages are, well, it's possible to get greater than this 7%. It's safer to borrow money. You get complete control. There are tax advantages, and it's less volatile. Now, here are the negatives for both of these investments. And as you can see, real estate investing, well, there's a lot more negatives. So in the stock market, yes, it's going to be volatile, and no, you should never borrow money. And in real estate, it's a higher starting amount you need, not diversified with just one property. It's time intensive, it's very slow to sell, and it can be a nightmare if done wrong. Now, I mostly don't like real estate as an investment. I think it's too time consuming and I just don't want to have all the headaches. Plus, I am attempting to get better returns than the S&P 500 index funds because I'm looking for deep value companies. But in saying all that, I do have a property and it's in the country of Georgia in far eastern Europe in the mountains. And super honestly here, it's really not a great investment and I could have done so much more with that money. Plus, it is definitely time consuming and it does cost me money every year. But there are some intangibles with owning property. I just think it's really nice to have a place that I can call home, I can leave some of my stuff, and I can escape to when I need to and I feel safe there. Now, there was actually significant tax reasons why I bought this property, and that's just really my individual circumstances. I definitely didn't buy this as a long-term investment, and I only bought something that I could easily afford. I think I only bought something small because I knew it wasn't a very financially smart decision. It was more of an emotional one. Now, I think if I was American, where I could get access to cheaper long-term fixed mortgages, then I think property would be a significant part of my portfolio. But I don't have this opportunity, so I don't have any plans to make property any part of my portfolio anytime soon. I'm going to stick with the stock market where it's just far easier. Now, I actually just recently had a very interesting conversation with my Ukrainian friend Mariana, and she's been brought up to believe that real estate is really the only investment. Her mum thinks real estate investing is a good idea, her friends think the same thing, and they all think that the stock market is a very dangerous place where you're going to lose all your money. Now, I tried to tell her that there are other investments out there and that locking your money up in an apartment when rent is so cheap in Ukraine, well, there's probably better ways to spend your money. But I realized that real estate is what she knows. She really understands it. And look, maybe it isn't the best investment, but at least it is an investment. And at the end of the day, if you truly understand what it is you're investing in, well, I think that is the right thing to be investing in. So maybe real estate investing is not efficient, but investing in what you know, I think is more important. So this is a topic with often very strong opinions, so I'm looking forward to your comments. And if you enjoyed this, well, please give it a like and subscribe to my channel so you don't miss out on any future videos, and I will see you next time.